Welcome back, everybody, to another special episode of the Expert Trader podcast series. We have a very special guest on the show today, millionaire trader and entrepreneur, founder of Stock Market Lab and TradeZella, Umar Ashraf. Welcome to the podcast.
What's going on, man? Thank you for having me. How you doing?
I'm doing great. I appreciate you for stopping by. I know you're a busy guy, so thanks for making time for this.
Thank you for having me. How's the weather in Miami looking?
I'm actually not in Miami yet. I still live in Virginia. I'm moving in about 2 weeks.
Oh, no way. I always thought you were in Miami. I think because of the event you threw, I thought makes sense.
No, we did the summit there because obviously no one's going to come to Virginia for an event. So
yeah, I can imagine.
Sense.
Yeah.
Yep. So few folks that don't know who you are, you want to give a quick backstory on yourself?
Sure. So my name is Umar. I have been trading stocks and options from 2013. So about to make it 10 years. Just realized that a few minutes before. Started when I was 18, currently 27. Started off trading stocks. Took me about 2.5 years to kind of get consistent, get good at it. From there, scaled my trading, added more money, scaled more setups, focused on more setups, more strategies, and just try to scale that up as much as possible. Opened up the idea of trading options about 4 years ago. So took my stock trading, elevated into options. And currently I also run TradeZella. We're a journaling platform. Aiming to become more than a journaling platform, basically one hub to help traders improve, their psychology, their edge, fine tune it, identify it, things like that. And that's about it.
That's awesome. For those of you guys who are Forex traders, TradeZella is basically like my FX book, but it's going to be like an upgraded version. So be on the lookout for that.
Yeah.
More or less. So you had a pretty, I want to say, you have a crazy journey when it comes to your experience in the markets. So 2013, you got into the markets when you were 18 years old.
Yeah.
You threw in, 20 grand into a few names and managed to hit big, did the typical thing, blew it all down, and then started from scratch. Can we kind of start from there? When you restarted and you refunded an account after having gone through that up and down, can you walk us through how you rebuilt and what that whole process taught you?
Sure. So and also keep in mind, 2013 trading wasn't as big as it is now, right? So wanting to be a trader or being attracted to trading wasn't as hot as now. So right now, if someone fails, it's very easy to keep going because you'll see certain people making money and doing well. Back then, it wasn't that big. So I essentially got started. I went on Forbes, looked at who made the most amount of money the year prior, and it was a hedge fund manager. I was like, oh, what do hedge fund managers do? They're involved in stocks. How can I get involved in stocks? Wow, I can trade. Okay. I opened an account. I had 20 grand saved up, jumped into the market. My first trade was JCPenney, right? I remember this very vividly. I put in the full amount into JCPenney. The stock went down 50%. My 20K turned to 10K, right? Then I waited another month at 10K, went to 24K. So now I made 4 or 3K on that trade. Essentially, it was a terrible trade because my drawdown was 50%. But I was like, wow, I just made 4 grand. And I'm in high school at the time. I have an early birthday. So I was like, wow, I made 4 grand. I'm so good at what I do. I can keep doing this. So I kept taking that money, 24K, next trade. Account grew to 35, maybe 40 grand up or down. And, you go on a high horse and you think you know what you're doing. And then next thing that happens, you go into one trade, have a big drawdown. And then you tell yourself, well, it's okay. Everyone loses money in trading. Another trade, same thing. Another trade, same thing. You go into summer of that year. My account's now about 2,000. So I touch a high of almost 40 grand to now having 2,000. So I go, oh man, trading is not it. This is hard. It's way harder than I thought. And essentially that's when, the people around you step in and say, see, trading is a scam or trading isn't great. It's not for everyone. Only billionaires are able to make it or whatever. Everyone has something to say. For me, I was just kind of like, hey, there's people that are successful in this. And obviously we hear the 90%, 95% rule of how many people are successful in trading and not. And I was like, I want to be that few percent that can make it. I need to figure out how. Right. And the thing with me is I'm when you're young, you're very hard-headed. When you can't do something, you want to do it more.
Yeah.
Right. Which is good and could be bad depending on what you're doing. So at that time, it benefited me because I was like, okay, I need to figure it out. So now I also told myself at the point where I was like, I wasn't actually giving it my all. And what I mean by giving it my all, I mean me actually spending the time to kind of sharpen my axe, focusing on what I need to work on, focusing on how can I improve, focusing on what is there for me to improve on. So I was like, you know what? I need to give it a fair shot. So a couple of months, went back to working, also started college, went to college for 3 semesters. So working, trying to save up money, selling iPhone, side hustles, all those things, built up a little bit more money. And I was like, let me start again. Right. So I started again and same thing. 2 months in, lost all my money. I think it was second time was around like 15 grand, saved up, lost it, and went back to it. And I was like, why am I losing money? And I was like, it essentially takes me 3 or 4 trades where I lose a lot of money. So I would have like on a 15K account, imagine losing 4K on each trade.
Mm-hmm.
But then when you make money, you're making $100. I was like, this is not sufficient. So how do I adjust that? Obviously, I need to make more on a trade than I lose. Why am I losing more? Like, these basic, simple things. And like I said, trading back then wasn't as big as it is now with the education on Instagram, Twitter, and all these basic concepts that we hear now weren't basic then. Right. So then I start going into more digging, more understanding. And then from there, I start educating myself. Right. And all the education is online. You can find education online. The only problem with education online is all scattered. Right. So you might find one strategy, but no one goes in depth that this strategy works with this way of trading. That strategy works with that way of trading. So when you're starting out, you're applying every indicator, every strategy. So from there, long story short, 2 years go by, restart again. I take a step back. I focus a lot on, the key things that I'm trying to do. And the key thing that I kind of focused on was how do I become a better trader? Not how do I make X amount? Because my goal was to make 100 grand. Now, instead of, hey, I'm trying to make 100 grand, it was how do I become good at trading? Now, what do I emphasize as good at trading? How do I make more on a trade and lose less? How do I keep my position size minimal? How do I keep my losses minimal? How do I, manage my losing positions? Wow, when I'm wrong in a trade, my ego kicks in and it tells me that I'm not going to sell and I size in. How do I prevent that? So I spent the next year and a half, which equated to 2.5 years on focusing on that. And one thing I did, I probably still have it in my house. I had a trading journal. Like I used to write everything down, my game plan, what I did, how I feel. And that for me was like the biggest thing just to learn about myself.
I totally agree. I feel like that was my big shift when you say taking it seriously. And that was a really great rundown of all the different phases that like most traders go through, kind of summed up. But I kind of went through the same thing where I realized putting in the work really means being honest with yourself, doing the stuff that you don't want to do, which is tracking and looking at before and afters and sort of analyzing the performance. So first off, you're a millionaire stock trader. Is that a fact?
Listen, I this is one thing I say. If everyone is a millionaire stock trader in Instagram world now, and I am not going to say I am or I'm not, I'm just going to say you can go on my Instagram or my Twitter. I post live logins to my account. So I post a live login to my TD Ameritrade, which is a verified broker. It's not like a fake broker or whatever, showing a $5.5 million profit year to date. Right. So I tell people to base it off that.
So basically that's a yes.
Yeah, but this industry makes it very hard to immediately be like, yeah.
To take on that, yeah. I'm not gonna slap the clickbait caption on you. So you're a very successful trader, and you've been able to learn a lot from that experience and sort of grow to where you are today. Can you talk to us about growing capital? This is something that I'm very interested in. How do you see growing small capital, and how do you see the timeline of how people should be looking at growing capital?
So I think everyone needs to understand that there's going to be a different timeline for every individual to grow capital, right? So the biggest thing with trading is I think trading is a career where you discover a lot about yourself. I think up until you get to the optimal point, you can't or you won't be able to manage a large amount of capital. A lot of people say, oh, well, if I had $50,000 or $100,000, I would be able to trade better. And I tell them, no, it's the opposite. When you trade with more money, it's actually a lot harder because of the emotional weigh downs that you have with the size. Losing $200 on a trade is a lot different than losing 2,000 or 20,000. So it essentially starts with where you are right now with the current capital. How are you able to manage that capital, right? In terms of what is your risk to reward ratio? What is your planned risk to reward ratio? What is your actual risk to reward ratio? What is your average winning trade? What is your average losing trade, right? What is your best setup? Define your best setup. What market conditions do you trade best under? How do you read market conditions? Now, if these are some basic questions that you can't answer, I don't think you're in a position to add size, right? And these are questions that you need to be able to answer and repeatedly do over and over again, right? Like, hey, like one setup I have is an opening drive play. right? I have a criteria for that setup. Another setup I have is a morning bounce play. I have a criteria. That criteria now becomes repeatable, right? My reaction to that setup also becomes repeatable. What I mean by my action is now if I'm in the trade and I'm up 20%, or I'm up 10% on the trade, or I'm up 3R, how do I react? How do I now manage that position? Do I get greedy and say, well, I want to juice out more out of this trade? Or am I like, no, let me start scaling out. Let me start adjusting. Am I able to recognize my patterns in real time? So all those things play a role. And I think give or take, could take 6 months, could take a year and a half. For me, it took me 2 to 2.5 years, but I've also seen people do it in 6 months. And it also took me 2.5 years with counting the time I didn't take it serious. Now, if I count the time where I started journaling, I started paying attention to my trades, and I started going through the process, probably about a year. Yeah, it's a completely different timeline. That's a timeline when you actually, are starting day one as trading with real capital. Demo trading and all that, I don't care how much you demo trade, how long, it does not count as day one.
Right.
When you trade with real capital, that's when like your day one of trading starts.
So have you seen any patterns for what differentiates how long it takes someone to succeed? Like what makes it so that somebody picks up trading faster than somebody else?
From what I've seen, and I've seen people pick it up in 6 months. I know a few people that have, and I think those people are the ones that are not chasing to make money. They're focused on the process very heavily. Like, how can I improve the process on a week-to-week basis? They're showing up every single day. Like, there's one person I keep referring to. His name is Jay. For 7 months, he was red in trading. But in those 7 months, if I was to ask him, hey, on January 5th, what did you do? He would tell me on January 5th, this was my pre-market game plan. This is what I traded. And this was my summary for the day. He had it all logged. 7 months that happened. 8 months, he starts doing well. 9 or 10 months later, I believe he starts being profitable. This year, I think in July, it was the first week of July or 2 weeks in July. I think he made 50,000 in just 1 week. He made more money in that 1 week than he did in his corporate job a year and a half ago. But the thing with him was he stuck through it. He didn't focus on making money. He created a process. He narrowed down on the process. He narrowed down on himself to know where he needs to improve, right? In terms of how he responds to the way he trades and what he trades. And he took that day by day. And in the long term, that all compounded.
Basically, even if you're losing, as long as you're doing the right things and you're being meticulous about tracking yourself and tracking your progress, you're still headed in that right direction.
Yes and no. It depends how much are you losing. Now, if you have a $2,000 account and on a trade, you're losing $500,
right?
It's not sustainable.
Granted, they have good risk management.
Yeah. If you have good risk management, and even if you're losing a little bit of money on a daily basis, you are on the right track as long as you are understanding why you're losing money and what you're trading has a reason behind it. Even if it's not the right reason starts to build as you're more kind of conscious and aware of what you're doing.
So we jumped the gun. We went straight to trading. If we could kind of
no worries.
I actually want to get your opinion on two things. One is on the economy today, and two is on markets today. So one, what do you think about the economy today?
So it's very tricky, right? So there's two sides of it. One side is, we're in a recession, yada, yada, yada. But the problem with the recession is what's in a recession, right? Now, the stock market is not always a direct reflection of the economy. We're in an interesting state because we had very low interest rates, not low, the lowest of all time yet. Going from crazy amounts of money printing to then seeing a slow increase not a slow, a very fast increase in inflation, with also interest rates increasing, causing this recent crash we had. And now the market is seeing inflation slowly cool down. So market's responding to that. My idea right now of the market, and once again, one thing I want to focus on is just because this is my idea today does not mean it can't change in a week from now. There's more data points and more information that may come in a week or 2 weeks or 2 months that will and can and possibly change my outlook. My outlook is I still don't think we have bottomed in the market. I think valuations in the overall market and the world economy are still very high. I do think the market going into the stock market, and obviously that will reflect the crypto market, is going to see another leg down in the upcoming year or maybe the next 16, 18 months. That's what I think. Now, at this current moment, I also don't have any open positions. What I mean by that is I always say, if you don't have a position, your opinion doesn't really hold weight. Right. Now, if I have $1 million short position on the market, Now my thesis, like I believe my thesis right now, it's harder to gauge for many reasons. There are some positions I want to take and have a real opinionated move on that, but at this moment don't have positions, but I think we have more room to go on the downside.
Can you expand on that whole concept of skin in the game, where when you actually have skin in the game, your opinion is worth a bit more because you have to stand behind the like whatever you're claiming?
Yeah, we see it on social media a lot, right? People would be like, I called it. And I'm like, you don't get brownie points for calling stuff, right? I don't care about calling stuff. I care about making money on it. I'd rather sit here and say I called nothing, but I made a ton of money, than to be like, I called every move that's happened in the past 2 years, but I made no money, right? The thing is, when you have skin in the game and you have capital in the game, your opinion, from an opinion point, holds weight because you believe your thesis, right? Because now if I say, hey, I think the market's going to go down and I have no position, do I really believe it? You know what I mean? Now, if I have an opinion from a psychological aspect, it also impacts my opinion, because if I am shorting the market and I have a position, mentally, it's very easy for me to just look at the market from a short point of view. Like, oh, everything's going to go down. Why is it going to go down? I look for the whys and to justify my opinion. Vice versa, if I start buying or playing the upside, I will look for all opinions or everything that justifies the upside. So when you have skin in the game, that gets adjusted too. Your outlook gets adjusted because now there's real capital at risk, and that starts also affecting your psychology.
Okay, that's perfect. I really appreciate that breakdown.
Yeah, no problem.
So we went through the economy. You said there's a disconnect between the market and the economy.
Yeah.
What do you feel like the markets are doing today? So I know that you mostly trade U.S. equities, right?
Yes.
Okay, so then what do you see the U.S. equities doing today, especially the names that you're looking at?
So because I'm day trading them, from a long-term point of view, I don't care. But then when I go into my long-term portfolio and I want to build long-term positions or swing positions, that's where, it starts mattering to me. Now, when we go off a valuation point of view, the PE for the S&P 500 is at a very high point. I do think the market is factoring some things in, but as the market starts factoring some things in and time goes on, that factor, right, like the way it factors things in, start adjusting, right? So it's like last year, before November, everyone was like, oh, well, this is factored in, that's factored in, inflation's factored in, the war's factored in, right, with Ukraine and Russia. And as time goes on, you start seeing all those things are important, but the main thing it comes down to is inflow and outflow of money. So if there's a massive outflow of money for whatever reason, no matter what you factor in and what you don't factor in, the markets will go down. So I think there's still a big portion of money in the markets that will outflow going into possibly the bond market and get diversified. But if you spread that across every market, even if you go in the car market, right? Like SF90s were going for $1 million and $1.1 million a couple of months ago. SF90s now are going for 800-900K. Watches that were going for 400K are like at 320, 350 now. Like a lot of things that are inflated are coming down. So even when you look at the overall economy or the market, they kind of correlate in terms of the money supply out there. So even going back into that, I think that correlation is there, and that correlation will start reflecting price maybe at the end of the year. Maybe we start seeing the downtrend from today, which is August 22nd. It's sometimes hard to play it on a shorter time frame, but if you play a year or 2 years out, it becomes a lot easier.
So are your outlooks usually 1 to 2 year dated, or do you go as far out as 3 to 5 years? Or do you
so
I
typically don't trade anything 3 or 4 years out. So, it's cool to estimate stuff and have these guesses for me, but because I don't really trade them, it doesn't benefit me. My estimates are primarily on a day-to-day basis, sometimes on a weekly or monthly basis, right?
So you don't do any investing, like long-term investing?
I have long-term investing positions, but those names I'm holding for 5-10 years. Like I'm not trying to time the bottom. Like Amazon recently, Amazon went to about $100. I picked some shares up. You know what I mean? Same thing with a few other names. I picked some shares up, not saying, oh my God, we bottomed, right? But I'm comfortable in paying that price point. But now if Amazon keeps going lower and lower, same thing with Ethereum. When Ethereum was around $1,200-1,300, people were like, oh, it's going to go to 700, 600. And I was like, I hope it does. But that doesn't mean I'm not going to pick some up at these levels, right? I'm comfortable at buying Ethereum at 1,100-1,200 and holding for 5 years. Same thing with Amazon and a few other names. But now if it does go lower, my time horizon on that investment is 5 years or 10 years, let's say, I'm okay.
For sure.
But now in terms of taking like a swing position for a year out, that's something really don't do often.
Yeah, no, I hear that. I didn't mean like in terms of trading, but just in terms of investing. I mentioned this on Alex's podcast, which is the difference between investors and speculators. where like an investor, if you've actually done due diligence on that investment and you have that long-term thesis, then as it dips down, you can accumulate more.
Yeah.
The speculator who panics when their investment drops because they haven't done the due diligence. So, I mean, if you kind of have like a longer term perspective, what do you feel like that? What do you feel like it looks like in 5 or 10 years? Like, why are you comfortable holding those names, for example?
I mean, realistically, if you buy good companies that have a good team behind them, let's say it's depending on how far that company is, like Amazon, Apple, and when you go into these names, I think they've established a very, very strong brand. So holding them for 10, 15 years is not really an issue. But now when you go into smaller companies, let's say you go into Square, still a great company, but they still have a lot of potential. Now it comes into, okay, how much do I want to go into their 10-year thesis? Meta, Facebook, same thing. Them diverting their whole business model, into VR and future technologies. How much do I believe into that? Going to Baba, right? Same thing. Now the amount that is invested into these companies are far lower than the amount I would maybe put in Amazon, maybe Apple at valuation numbers, like at comfortable numbers. Because Amazon, if I pick it up at $100, in 10 years, maybe not 15 years, my money will double, if not triple. Right.
So it's basically like how much runway do they have? Is that kind of accurate?
I mean, in a way, runway, and also how strong they are. Obviously, the more stronger they are, the less money you'll make on your capital. But you also don't want all your capital tied up in terrible names, right? Like with this recent tech crash, I know so many people that were in, like, I don't want to say terrible names, but heavily inflated names. And when the tech crash happened, there's people that lost 70, 80% of their savings without being adjusted. Like one thing that really, really saved me is I picked up a ton of ExxonMobil at around 30-ish. So I picked that up at 30-ish. Exxon went to 90. So just that with my dividend and so on has paid handsomely. And at that point, I was also like, maybe I should put this money into this name. I can double or triple it in like 2 months. But I was like, no, look at the worst case situation. Look at it from a risk perspective. If things do go bad, you picking up Exxon or ExxonMobil at $30 or $35 is a steal. Maybe not in a year, but maybe in 2 years, I'm targeting $60. Plus, you're getting a 7, 8, 10% dividend or whatever it was at that time. Same thing with some REITs, right? Real estate investing, like Store Capital. There's a ticker O. There's a few of them that I put my money in where I'm not trying to make 100 or 200%, but I'm just trying to grow my money and park it. But now the position I'm in now with some names, let's say going down 50, 60%, I can sell some of my Exxon, which is what I'm planning to do. Rotate that money into these names that have, made a massive hit down and now accumulate wealth the proper way.
There we go. So it's basically like the speculative names will give you a higher return, but the more trusted blue chip, they're going to be more for longer term, but you'll get a smaller return from those.
Yeah, but see, with ExxonMobil, I bought it at 30s. They went to like 90s. So in about a year and a half, you still more than tripled, right? Like you tripled your money on a very strong company.
Granted, we don't always get a war in Ukraine, so that doesn't come.
Yeah. So in a way, from a financial point of view, that worked out. Same thing with other names, but now it's like, how do I rotate that money out? Just because it went up, now I'm not going to sit here and say, well, it's going to go from 90 to $300.
So this is really crazy. I saw an interview of you from 2018 where you were talking about the market crashing in the next year and a half. And we were in the same camp because in 2018, 2019, I was writing articles basically talking about how the amount of money that we pumped into the system and the amount of inflation that we had meant that we had to sort of have a drop off. A year and a half later, we had the pandemic.
Yeah.
And so your fundamental thesis ended up playing out. Were you sort of looking at the long game? Were you taking advantage of opportunity during that whole process, or what ended up happening there? Because you were spot on with how you described that. I don't know if you.
Yeah. No, I remember that. People brought that up, but I'll be super transparent. The pandemic kind of accelerated that. I had no idea it was like that's how things were going to unfold, to be honest. So the pandemic did cause that initial crash, but the pandemic also did cause that massive rally we got for a year and a half to 2 years. Right. So that was kind of a black swan event. And I don't want to sit here and say I predicted that particular event. The only thing that I kind of like that I assumed was we have too much money printed even at that time. And now it's even more. Inflation is a lot higher than people are, predicting even at that time. And the market eventually has to adjust and interest rates eventually have to go up. And when they do, the market will see a rotation. And that's kind of what we're seeing now because the market's forced to do that. right?
For sure.
But in terms of predicting that, I wish I predicted that perfectly. But in terms of opportunity, the one thing I did very well with was Bitcoin.
Mm,
I messed up.
okay.
I made terrible mistakes in 2020. I will tell you that much. I made terrible mistakes is because initially when the pandemic happened, I shorted the market. I think it was in February. I shorted the market. I had about a $500,000 position in the market. I sold a lot of my long-term names, and I'll tell you about a few of them in a bit. But I sold my long-term names. I shorted the market. My position in the market, which was 500K, went to about $900,000. That whole position went to zero because I traded options. Because I shorted the market going into March. March, we got a heavy reversal. I kept averaging in. My total position size of my money invested was 500,000. My unrealized profit, if I sold it at one point, was close to 900,000. And when the market recovered, I basically lost all that money.
So if the Fed hadn't stepped in, technically their thesis would have played out.
Yeah, but also when the Fed stepped in, I got too invested into my thesis. Because I have money invested, I'm like, well, market's got to go lower without taking a step back and saying, put your money to the side, put your positions aside. The Feds are not going to let this go lower. They're lowering interest rates to 0%. They're printing as much as money as they need to protect the economy or protect the market. A lot of money is inflowing into the stock market from the bond market. There's relatively no way we're going to go lower. But at that time, because I had a position, I was like, no, we're going to go lower. So I lost 500K plus my 400K unrealized, if you want to count that or not. Mm-hmm. And I took a hit on that. And I took another hit because I had over $1 million in Tesla. Wow. And this is, if you do pre-split, this is probably, if you go to March of 2020, that's where I sold Tesla. And like, I don't even know what the price was. I tried not to look at it, but that investment would have been like 10 to 12 million today.
Yeah.
If I just held that. And my plan with Tesla, and this was the crazy part, right? I was not planning to sell Tesla. I wanted to hold it for a very long term play, right? I sold it because I was like, we're going through this crazy time. Let me sell it and rebuy it for lower. I was like, oh, I'll get a 50% discount. Let me sell it.
We were all trying to time the market. Let me be completely honest. It was very hard not to make mistakes in that time. I don't think there was anybody who trades, because if you trade rationally, you're looking at all these different chips playing out and you're like, all right, this has a lot of potential to go lower, and we all got invested in the downside. But yeah, when they print 17 trillion into the economy, you're gonna see a rebound, and that was the playbook. That was the playbook that we all sort of confirmed in 2020.
And
the Fed was the backstop, you know.
Yeah, no, that was a big blow to me. Because that was kind of like my biggest loss, and it wasn't even the loss aspect. It was because so a lot of times I take positions, I would talk about the position while I'm in it. I wouldn't just randomly pop out and say, hey, I made X amount. Here's my position. No, I would say, hey, the position I'm taking, how much, and this is the outlook, right? And when I took it, a lot of people followed me because they saw my conviction. It was like, wow, he must be right. He has X amount in. He's going in super heavy. So it hurt from that point where I was like, damn, like I had people lose money. And then, you know, obviously on social media, you hear everything. Oh, you suck. You don't know what you're doing. You're not blah, 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 blah. And it gets to you at some points. Right. At that point, it got to me. Now I really don't care. But what I did well with was Bitcoin. So that summer, I started accumulating a lot of Bitcoin. Right. And Bitcoin at that time was around 10 to 12K. And even at that time, I had an SV, had a McLaren. Now, like I'm not really crazy about cars that much, but I had cars and some other stuff. And every majority of the money I had, the cash I was sitting on, I was just dumping in that. So my SV, I got it in that December. I sold it just because the car started giving me problems, single clutch. And I was like, you know what? I'm going from Cali to New York to Miami. The car's parked in Cali for 3 weeks, not touched. I forget to charge it. It dies, blah, 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 blah. So I sold it. I got 400 and I think 60K from it or something. I took all that money.
Or no?
I didn't lose money on it. I didn't profit. Okay. I didn't lose money. I kind of evened out. If I waited a little bit more, I could have sold it for more, but I put all of that money right when I got the check. I even put that in Bitcoin, and Bitcoin at that time, I think was 11 or 12K. So now when you start seeing the accumulation at that price point, it just like that was one thing that worked out very well for me. Not just the car thing, but
I
other
bet.
ways.
I
Yeah.
bet. Yeah.
And then the only thing is I wish I sold more at like 50K. I sold maybe like 15-20% of it, but I'm comfortable holding it for like another 5-10 years. Like that's money I put in. I don't look at it. I don't touch it. I'm like, hey, like this is something I'll talk about in 10 years. If not, I'm good.
So this is a question I ask a lot of people who invest in Bitcoin. So we're obviously all in drawdown. At some point when it recovers and you see profits again, are you hoping to take any off the table because of the extended period of drawdown, or are you going to treat this like any other trade or investment and see it through?
No, I think after this drawdown, the next leg up, right, should be higher. And I say the word should because nothing's 100%, right? Bitcoin realistically could go to zero, and I understand that, and I'm okay with that. If like the money go, like I would obviously not want that, but if that's what happened, like
Right.
I'm understanding of it, right? But no, I believe in the next leg up, I would target at least 100K plus. My profit target on where I would probably start taking half of it off would be above 150 if we got there, right?
Okay.
That would be, it's more me taking 20% off, recoup some of the money I put in, also being up 6-7x on that puts me in a comfortable situation to let the remaining ride out. And the remaining that I'm in is like either I'm going to hit big with it or I'm not going to play it as a smart investment. There's investments that I'm in where I'm like, okay, if I, average 15% a year, I'm good. That's money sitting and growing and compounding. Then there's money where it's like, okay, this I want to 10x or 15x this with a large amount of capital. And if I lose this large amount of capital, not that it's okay, but it's like you can live with it.
Right. Let's transition that to trading. So do you do the same thing in your trading when you put on a position, or do you take partial profits and let the rest ride? Or do you trade differently?
Yes, sometimes I do. It depends on my position size. There's times where because I trade options, when you're in like say 50, 60 contracts, sometimes it gets very, very like your P&L starts fluctuating very heavily. So if the position is going in my favor, there's times I would take 20 to 50% off and slowly start scaling out. For me, I found out that's very beneficial because when you're in a position and you start seeing your P&L fluctuate 10K up, 10K down, you're up 40K, now you're up 35K, now you're up 52K, and you haven't made any money relatively because you haven't realized any profits. It's like, wait, let me start realizing some profits. The downside to that is there's days I've sold a position where I've maybe made 40K, and I kid you not, 5 more minutes, I would have made 120, 140, like 5 minutes.
Yep.
So psychologically, you're like, oh man, like if I held it, but then that's where I think the reframing for traders kicks in. Like you need to go back to that moment and say, I was not willing to risk my profit of the day or on the trade to make more money. So I cannot be upset. But because now if the trade that I was up 40 grand in went to 30K, I would have still been upset. So now
Right.
I'm just creating a scenario after the fact that will not help me become a better trader and get to where I'm trying to get to. I need to be okay with what I decide in the moment and move on and see how I can get better. That is it. I cannot control what happens next. It's like playing the lottery, right? You can sit here and say, well, I wish I guessed 9, 7, 8, 15, 5 after you saw the numbers. But before you would have never predicted.
100%. So, I mean, if we can take a 30,000 foot view, I know we just got very granular with trading, but if we can take a 30,000 foot view, how do you see trading? Because you just made the analogy to a lottery ticket and the unexpected nature of trading. How do you see trading? Probabilities, strategy, like what's the game to you?
Yeah. So I think trading is a probability game, right? There's no 100% certainty in trading, right? It comes down to all probability. But now there will be some trades that have a higher probability, some trades that have a lower probability. In simple terms, your job is to identify trades that have a higher probability, go into that trade with the expectation of losing. So you protect your downside, make sure that that trade has room for the upside where you can make 2 to 3 times your trade amount, and you keep repeating that process. With lottery, let's just say you go to gambling, typically it's a 1-to-1, right? Like if you risk 100, you'll make 100 or you lose 100. Right? In most situations, depending on what you're betting on and things like that, right? So with trading, if you can manage that well, most of the time, if your management of your trade is done properly, you're risking 100 to maybe make $250 or 300. Now, if you can do that repeatedly and still be able to take losses in the grand spectrum of things, you will walk out profitable.
So it's a risk and reward game, and it's a game of probabilities.
Yeah, that's the way I would look at it, and
Okay.
not anything beyond that.
So what about strategy? Is there one set strategy? Because obviously I want to say it's a Forex channel. There's a lot of different types of people that listen to this, but a lot of people that listen to this are traders, trade Forex. Is there a
Yeah.
difference between Forex and stock trading, just in terms of strategy, in terms of, in Forex, for example, you can have thousands of strategies that are profitable. It's the application of the strategy that differs. Is it the same in stocks, for example?
Yeah, 100%. I think it's execution, right? I can give you, let's call it a perfect strategy, right? A perfect strategy doesn't exist. I can give it to you and I can share it with 1 million people. But out of those 1 million people, how many of them can actually execute that? How many of them can read when that strategy presents itself? How many people can read when the strategy, like the trade idea, starts slowing down? So if you go into a trade expecting to make 200, maybe you make 100 and this trade is slowing down. Price action is not as aggressive anymore. How many people can recognize that in real time? How many people can execute that in real time? Right. So I think it comes down to execution for any financial markets, right? Or anything in life. It comes down to execution. You can give me the best idea in the world right now. If I can't execute it, that idea doesn't mean anything. Right. So execution plays a big role. I think if you can execute at a high level, it's a funny thing. The other day, I was talking to someone and he's like, yeah, I've been trading options and options hasn't been working for me. So I think I'm gonna go trade Forex. And I asked him, like, what's your problem? So my problem is every time I get into a trade, the trade goes against me. I don't cut my losses. When I'm in a trade, I make money. I don't take my profits. I was like, okay, so you're going to do the same thing in Forex. What's going to be different? Like, it's you, not the market. He's like, oh yeah, that makes sense. So the execution part there makes a big thing, makes a big difference too. But in terms of strategy wise, I think you like, see, for me, I don't have 1 million different strategies. I have maybe like 5, 6 different things I look for in the market. Some days the market presents it. Some days the market doesn't present it. When the market is able to present it, I can nail it and really, 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 generate a good amount of money from it. When the market doesn't present it, I'm disciplined enough to sit on my hands and say, well, nothing today. Right. So from a stock trader's point of view, there's like 20 trading days a month, right? So you do 5 days a week, 4 weeks out of the month. You're looking at 20 trading days. Out of those 20 trading days, there's typically 3 to 5 high quality days. If I can nail those 3 to 5 high quality days, I will make 70 to 80% of my monthly income from trading. The other days, my job is not to necessarily always make money, but it's to stay alive. It's to make sure I don't burn capital and I don't destroy my mental edge. Because now if I have a day where I lose 5K or 10K, it's not that I just destroyed 5, 10 grand. It's also I destroyed my mental capacity, my discipline. And now the next day I'm more hesitant because I took a stupid trade.
For sure. It's kind of like your relationship with yourself as a trader. It's like if you're doing stuff that you shouldn't be doing, it's hard to have the same confidence when you step back into the markets. So I want to ask you about 2 different things. So one, I want to get your take on, like, this is kind of like a fire round. So it's kind of boom, boom, boom. And then I want to ask you about starting a SaaS company and some of the trials and tribulations that you've gone through there. Then we can wrap it up. Cool.
I'm down. Let's go.
All right. So social media and trading. Where do you feel like social media plays a role? Is it helping traders? Is it hurting traders?
I think it's hurting traders. All right. I think it's hurting traders because social media. So a few things, right? Number one, a lot of things on social media are fake, right? Everything on social media is fake. And I put myself in that category and I'll tell you why. And I want everyone to start thinking like that. Everything you see on social media is fake in every industry. Now, there's maybe 1 or 2% things that are real. Okay. Now, the real, you need to be able to identify what's real. For trading, right? Just to give you an idea, like I said earlier in the beginning of the podcast, go to traders that are showing you a live login to their account, a video, not a picture, not no Photoshop crap, a video of a broker, right? I know with Forex, there's a lot of things of some brokers not being regulated. A lot of people, like, I don't know, I've heard things about it, but in stocks and options, like, no, like if you're in TD Ameritrade, you're on Webull, like you're not faking anything there, right? So you see someone, like, for example, last year I posted my login showing 5.5 million, right? I have a proof of like, hey, I did X amount on one account, total did 7.5 million from day trading alone. Now, if I come to you and I tell you something, there's substance behind it. There's difference of me coming and telling you something about trading than the next guy or the next person that has read a trading book and taken the trading book, they're just kind of recircling.
Regurgitating.
Yes, yes. That's there's a big difference of that, right? That is actually a big problem for traders, right? And that problem for traders is going to start having a big issue. You know what I mean? And that big issue is going to cause so many problems in the long run for traders, because now they see someone making 20,000 or 30,000 doing things the wrong way and sharing the wrong information that's causing problems. You know what I mean? So that's where it essentially becomes a problem. Like even for me, sometimes when I look at trading and I go through a slump and I see some traders do really well, I'm like, oh man, like it plays a role. Like I'm like, oh man, how is he or she doing so well? And same thing on a higher scale.
Right.
So it's like you need to differentiate between who's providing real quality information and who's actually, sharing it through real experience, right? So you can actually replicate that. And then also, I think if you are a trader starting out, and like one thing I see a lot of traders do, they'll trade for 2 months, 3 months, and they go on social media trying to show their progress. Show your progress, but don't show dollar value, because dollar value will mess up your ego. Because now if you go and you show you made $200, like, wow, I only made $200. Like I hear traders like, I only made 200. I can no, you just started out. Stop focusing on the money, focus on the process. So too many people want to showcase like, oh, I made X amount. Like, no, focus on the process, and social media starts impacting that.
For sure. You'll never win the dollar game. I'm gonna tell you guys this, even for me. I'll get on there, I can post a $7,000 profit in one day. Somebody somewhere made $100,000. All right. So it's not really a competition. As long as you're staying focused and you're making progress in your own trading and you're competing against your own progress, I think that's the biggest key that traders need to keep in mind.
Yeah, no, absolutely 100% agreed.
Two more fire round questions. One, prop firms.
Okay. What about prop firms?
The current state. The cat's already out of the bag. So everybody, like, look, this is the statistical probability of you passing each phase of a challenge is incrementally smaller and smaller. And so the amount of people that actually make it to the end stage and that actually get a payout,
very limited,
very small. But everybody still goes just for the chance of it because they saw somebody do it. I kind of wanted your take on like stock firms versus say Forex firms and things like that.
So if you try to go through a stock firm, you'll see the process is a lot different, and the process is a lot different in real because it's regulated. Forex firms, it's not, because it's not regulated, and a lot of the money you're trading and the process is more to make money on the front end, which are the test, right? And once again, I'm not labeling anyone, but if anyone wants to say that I'm labeling them, I'd be very open to looking through it and making an assumption and a bet and having you open your books and having someone show that. And I'm pretty sure no one would do that, but that's not my place. My thing is just, if you are taking tests, even in stocks for anything, make sure they're regulated and make sure that the market is not rigged against you, because the Forex market or overall market with the test have been able to replicate it the same way casinos are in Vegas, right? Like your chance of hitting the jackpot is 0.1%, but the amount of money that goes into it exceeds the amount that they pay out.
For sure. I mean, what's crazy is everyone walks into the casino knowing they're about to lose, and they still walk in. And that's the beauty of it, is that it's still choice at the end of the day. So folks can still choose. Like I got funded in 2020, and even though it wasn't real capital, and eventually that company went under because they were advertising it as a genuine prop firm, and it turns out it wasn't. It was a simulated account firm. As long as the money was getting paid out, it didn't really matter to the end user.
As long as there's money, as long as you're getting money paid out, the criteria that's set up is right and it makes sense. That's great. Now in trading, like essentially, I want to create my own prop firm, and like that's the path that I'm going on in the near future. It's a lot different, right? There's no real test. There's a very different process where I only make money if you make money. So to take a test, to practice, like I have such a hard time grasping that idea. And when I think about it, it just doesn't sound like, you know what I mean? Like
the way it makes sense is like you give someone a small account, and as they grow and as they show their responsibility and their capacity to handle the money, you increase the amount that they can manage. I think that's a responsible model versus like, here's an arbitrary demo test. And if you pass this 30-day test, which you can pass by 1 or 2 over leveraged trades, then that makes you qualified to handle 6 figures.
Wait, so hold on. So these tests, I'm curious about something, right? Because I've seen some of the test setups. So typically you have to hit that target, and those targets are really absurd most of the time.
No, it's a 10% target, but it's the risk parameters that makes it hard for traders because you can't violate a 10% maximum risk on the account.
Yeah,
that's
in
one sense, it actually forces traders to be more disciplined, but in the other sense, 99% of traders don't have that.
Okay, makes sense. Listen, like I said, I know there's real good companies out there, and I'm not saying everyone, but there are also companies that like you mentioned, have went under, and I know some of them that did go under. And I just want people that are going and spending money on anything, just kind of do your research. Same thing with stocks, same thing on anything you buy. It doesn't just relate to Forex or stocks. Anything you spend money on, even if it's $1, $100, $200, just do your research for a moment before you spend your money.
Perfect. Great way to wrap up that discussion. Umar,
yeah,
I put you in the middle of that crossfire.
No, you're good. It's just because I know some people that do it and they're doing a great job at it. So it's like when you talk about some things, it's very easy for like people to start categorizing. Well, is he talking about him? Is he talking about her? And I'm like, I'm not really talking about anyone in particular. I'm talking about in general, which is why I said I know there's people that do it and to do a great job at it. I don't want to like. It's just how people take things out of context, you know.
Dude, it's nothing controversial to say that people should do some research before they buy something. I think that's very fair. Talk to me about starting a SaaS company.
Big
steps from being just a measly stock trader to a SaaS company.
So it's crazy. So the idea started in 2019 for TradeZella. It started because I looked first to journal. Like I've been big on journaling my trades. I've used other softwares out there. There's a few other softwares out there, and all of them lacked a lot of things to help trader development, right? And what I mean by lack is there's one that the UI sucked. Another one where they weren't focused on helping traders. It was more focused on just throwing raw data at you. A lot of insights and reporting wasn't valuable. So I was like, you know what? It'd be cool if I made my own journaling platform. And essentially, when I wanted to make it, it was just for me. And I was starting my Ashraf Capital firm in 2020. And I was like, I'm just going to use it for my firm. And obviously that went under because of, California and COVID with the shutdown and blah, blah, blah. So I just didn't really maximize on that. But I was like, that's what I'm essentially going to create it for. So I started the project in early 2020. And I know nothing about development. I know nothing about tech, like zero, like nothing. So what I did is I made kind of a very irrational move. I went with the development agency and I hired them without really doing my due diligence, essentially. So I hired a team just because, they sounded like they knew what they were doing instead of me doing my research. I was also very busy at the time. This was January, February of 2020. I moved to Miami. I also had my first $1 million trading month. So when you start making like an absurd amount of money, you're like, it's not worth my time to deal with that. That's how I looked at it. So I started with the team. They started working on the initial product, and we were supposed to launch in September of 2020, which was terrible estimates. There's no way we were going to get to a launch of, that time frame. Now, as we get to September of 2020 and we get closer and closer, the product is not done. We're not close to where we had expected. Then we push it to October. Then we go to November. As we go to November, I start noticing that there's a lot of things in the product that don't work. Like they'll work one day, then won't work the next day. So I go, one concept I always follow is to get second and third opinions. So even if I go to a doctor and doctor tells me something, I'm going to go to 2-3 other doctors because someone's opinion is only amounts to their level of expertise and knowledge. So if I go in and I take the same scenario to 2-3 other people, they might help me solve it a lot better. So I was like, I don't know why I haven't done this. Oh, I know why I haven't done this. I've been so busy with X, Y, and Z. I was like, I'm just going to throw money at it. And it's going to like magically be a successful company. And obviously that wasn't the case. So I went to other companies and I started getting feedback. I was like, here's the code. What do you think about it? They're like, this is not written good. It's not scalable. It's not like in terms of development, it's not refactored. There's no test done. There's no scalability behind it. Like, and I went to like 6-7 different firms. I even paid some of them to get, consultation and feedback. And all of them were kind of in the same line of feedback. And I was like, wait, it's different if one firm tells you that because maybe they want your business. Another one tells you, but now all 7 or 8 that are. So I go back to, the initial team. I bring this up and they start making excuses like, oh, well, we're not going to run the test until the product is launched. I was like, why would I launch the product without doing tests to make sure it's scalable and everything's fluid. And then a lot of the code was not written in a way where I can automatically scale that at a easily doable way, right? So I was like, okay, we're done. So we separate from them. I get all the files, I get all the databases and everything from them. This was in December of 2020. And I already spent quite a good amount of money with them already. And now I'm like, hey, do I go and like fight it and try to get my money back? And then when I spoke to some people, they said, going into a lawsuit way, you're just not going to win. So I said, it's okay. I'm just going to close the chapter and move on. So then I move on. I go in and look for other firms. And then I spent 3 months probably interviewing 100 different agencies, tons of different people. And I was very skeptical on hiring a person opposed to an agency, because if it's a person, there's no real accountability. If it's a developed agency or company, there's accountabilities. And because I don't have any experience, I'd rather go with the agency.
For sure.
So then I hired another agency in April, and I probably spent 60 grand with them in a span of like 7 weeks. And by the way, 60 grand is very, very low. It's not like.
Did you end up starting from scratch, or were you just fixing the original code?
We were fixing the original code. So when I spent money with them, when I spent 60 grand with them for like 7 weeks, they were pretty expensive. Like good firms are expensive. They're not cheap, right? Mm-hmm. Nothing moved the needle. I didn't like the way they worked. I didn't like the way they communicated. Like by far, they were worse than the first company, but they were more expensive. Because they were more expensive, and because their recent projects, like the co-founder worked with I forgot what the company's name was. Damn, I can't remember it. But he worked with a very big company prior, so that made me comfortable in working with them. But they did not move the needle. Mm-hmm. And I was like, you know what? I'm going to follow my intuition. I don't want to work with them. I cut it off, and I was like, we're done. We're not working anymore. I don't like the way you guys worked. I don't like the way the sprint planning was done. And then finally, I came across the last company that we found, and this company has built a prior business that's valued at $3 billion. Oh, wow. Right. They worked on a software that's worth $3 billion. I went through them, blah, blah, blah. We checked out how much they charge. And this was in 2021. So what they initially quoted us in terms of hourly price was great. And then when we went to start the work, the software industry in terms of developers took a big hit, meaning there was not enough supply out there for people to hire good developers. So right. They were like, hey, listen, it's getting competitive. We need to up our price. And that number went up drastically. So I was like, I'm at a tough spot. Where do I go with them, or do I go back to square one to save a couple of grand a month? So I said, you know what? I'm going to start with them. So we started with them in 2021 for 4 months, 5 months. They basically refactored the code. They helped stabilize the system. And then in December, we started re-adding features, re-adding things in the platform. We did a private launch in February of this year. And up until now, we have been by invite only, right? And we plan to stay invite only probably for another 2 months. And the reason we stayed invite only is because I wanted the people that joined, I wanted to kind of be involved with the majority of them to see ways we can improve the product and ways we can add certain features to help elevate the product, right? And that's all we've been doing from February till now since we've launched. It's hard for me to share the numbers of what valuation and our ARR and all those things right now, for like privacy reasons. I'll share them one day, but just not right now. Right. But we at this point, we're fully self-funded, right? Like the product is paying for itself. We have 3 engineers on the team. We're adding a 4th one. We have a product manager, a designer, a few other people part of the team that are helping us kind of, scale this product. And in terms of me, I've not made $1 from the product. Like, people might be, oh, well, I've not made money. I'm in the red, right? Essentially. But the main idea here is just to create a platform that helps and empowers traders to become profitable. Simple. Like that was my only goal for this year. It wasn't to be like, well, I want to have X amount of customers. Or I want to have, X amount of this, or I want to make X amount of money. Like that is not.
What do you hope TradeZella does for traders?
So essentially, I want the end goal for TradeZella, and we have a very extensive roadmap, right? So things we're developing, like they're very, very extensive. Like it doesn't exist in the market. What we're looking to do, like for example, just give you an idea of one feature. where you can go select 10 trades and say, if I held these 10 trades for 5 more minutes, what would my outcome look like? Right? Just something as small as that, right? So the outcome that I'm essentially looking for TradeZella is any customer, any member that joins TradeZella is able to plug in their data, understand how to properly journal, because we don't just give you data. We're focusing on building habits for you to trade the right way, building insights for you to trade the way, and showing you how to use each report. So once you upload your data, we show you ways to upload it the right way, because the first step in any sort of journaling is collection of data. You can't just upload trades into any journaling platform and expect to get results or expect to see feedback. So for example, if I trade Forex and stocks and I have different position sizing and I trade different markets, my collection of data is already bad. So it starts off with the way you collect data, the way you take trades. So that's the first step. Mm-hmm. So a lot of traders don't know that. They don't know, like, it starts with that. So they'll upload data points into a software and be like, well, what do I get from this? What we're trying to do is wait, here's the first step. This is what you have to do with raw data. This is what you need to look at. This is how you improve. Oh, you're having this problem? Okay, if you're having this problem, this is what to do. Oh, you're missing out on profits? This is how you tell if you're missing out on profits. And these are ways to combat it. These are some exercises, right? So it's essentially like a trading coach that comes in. And that's like the idea with TradeZella kicked in. Zella is like your Siri or Alexa, like Amazon has, that gives you feedback, that helps you, that tells you what you need to improve on. And we just want to basically dominate the market in terms of helping traders evolve, like Forex, crypto, stocks, options, futures. Like, we want to get into that space. And the thing about us compared to competitors is we've been out from February, which is like 7-8 months. And our backlog and our product list is already more evolved, if not at the same level of companies that have been out for 8 years and 9 years. There's a competitor
in terms of the partnerships that you've been able to build and the amount
not even just features, just what we have. Like, we've been able to have more in 9 months than some of our competitors have since they've launched, right? Like, I know 3 or 4 our top competitors. Like, one's been out from 2012, one from 2015, one from 2016, and we are at the same, if not more than most of them, in a short period of time. So I'm like, you give us 1 more year until next summer, because now we built the foundation. We added a new developer. We have a strong development team now. We will kind of surpass everything.
I've only seen a snippet of the UI, but it looks absolutely incredible. So I have no doubt that you'll take over that industry.
I appreciate it.
Amazing things. Umar, where can people find you?
You go on my Instagram or my Twitter, which is my first name, last name, Umar Ashraf, on Twitter or Instagram. That's the main 2 areas, I guess. Yeah.
Easy. We'll go ahead and link those below. Umar, thanks a lot for stopping by. I know we kind of covered a lot of topics. I want to make sure that we get you in for a part 2, because we covered markets, we covered trading, we covered your businesses. Maybe we can get deeper on trader psychology and some of the analytics finding with TradeZella, because I think that's the interesting piece.
I think that'd be dope. Yeah, let's do it.
All right. Thanks for stopping by, Umar.
Thank you, man. Thank you for having me.